A simple guide to earn up to 10% per day staking BNB crypto. Unless you've been living on Mars the last decade, you're aware of cryptocurrency, and there's a good possibility you're either lightly or heavily involved in the crypto market. While there are many digital currencies for you to invest in, today we'll focus on BNB, which is an ERC20 token built on Ethereum. Let's get into the core details and tips about BNB. Here's a simple guide to earn up to 10% per day staking BNB crypto. Welcome back to Big Brain Money. Ring the doorbell by liking this video, and if you've never visited before, knock on that subscribe button. What is BNB crypto? BNB, or Binance Coin Binance, is a cryptocurrency trading exchange founded by Changpeng Zhao. They were based in China but were forced to relocate to the Cayman Islands after due government overreach into its business affairs. It didn't take long for Binance to become one of the largest crypto trading platforms in the world, with its extensive list of trading pairs and lower fees when compared to competitors. The site's apparent lack of KYC, know your customer restrictions, were also appealing to many investors. But in the years since its initial release, Binance has added many KYC measures. In 2017, Binance launched Binance Coin, also known as BNB, with an IPO. Binance offered 10% of the supply to angel investors, 40% of the supply to the founding team, and the remaining supply to the public. BNB is used as a utility token for the Binance exchange and allows users to pay much lower rates for transactions and trading fees, lower rates than they would pay with any other token. Binance utilizes the method of token burns, so they use the profit from token sales to repurchase more BNB and then burn or destroy them. In 2019, BNB was taken off the Ethereum network and put on a new native chain. It was moved once again after the announcement of Binance Smart Chain. BNB is a digital asset much like others on the market, in that its value rises and falls as people buy, use, and trade it. People can hold BNB in compatible wallets of crypto exchanges and then send the coin directly to others for payment or services. BNB can be purchased via several avenues, such as Binance's crypto exchange, for example. As always, though, be sure to research and abide by any applicable jurisdictional laws, which are becoming harder and harder to navigate around. As far as the technology, BNB works in tandem with two blockchains, which are Binance Chain and Binance Smart Chain, or BSC. BSC is a separate blockchain built with Binance Chain and running parallel to BC, carrying different features such as smart contract capability. When building BC, Binance designed the blockchain for the most optimal performance when it came to trading on-chain, basing Binance DEX, Binance's decentralized exchange or DEX, on BC. However, BC is limited in other areas such as the potential for developers to build solutions on it. Adding even more capabilities to its ecosystem, Binance launched Binance Smart Chain in 2020. Adding even more capabilities to its ecosystem, Binance launched Binance Smart Chain in 2020, giving its developers more options when building their blockchain projects on BSC versus BC. BSC does things that BC does not, like hosting smart contract functionality, for example. Binance Smart Chain is completely separate from Binance Chain, but both chains operate parallel to each other. BSC is also able to work with the Ethereum Virtual Machine, or EVM. Payment in BNB is needed when interacting with other blockchain, whether BSC or BC. What is staking? Staking is how most cryptocurrencies verify their transactions, and it allows people staking to earn rewards on their holdings. So what is crypto staking and how does it work? Staking cryptocurrencies involves committing your crypto assets to support a blockchain network and confirm transactions. It's accessible with all cryptocurrencies that use the proof of stake model to process payments. This is a more energy-efficient way to process payments as opposed to the original proof-of-work model. Proof-of-work requires mining PCs that use copious amounts of computing power to solve mathematical equations. Staking is a great way to use your crypto investments to generate a passive income, especially with cryptocurrencies that offer high interest rates for staking. Cryptocurrencies that use the proof-of-stake model use staking to add new transactions to the blockchain. First, you must pledge your coins to the cryptocurrency protocol. From there, the protocol chooses validators to confirm blocks of transactions. The more crypto you pledge, the better the chances you are to be chosen as a validator. Every time a block is added to the blockchain, new digital coins are minted and distributed as staking rewards to the validator of that block. Most of the time, the rewards are the same type of cryptocurrency that participants are staking, but some blockchains use a different type of cryptocurrency for rewards. Once you buy your crypto, it will be put into the exchange you purchased it from. Some exchanges have their staking programs with selected cryptocurrencies, and you can just stake crypto directly on the exchange. If that's not the case, you'll need to move your funds to a crypto wallet. Wallets are the best way to safely store and trade cryptocurrency. The easiest option is to download a free software wallet, but there are also hardware wallets available for purchase. Once you have your wallet, choose the best option to deposit crypto and then select the type of cryptocurrency you're depositing. While staking can work differently depending on which crypto you're investing in, a lot of crypto enthusiasts use staking pools. This is where crypto traders combine their funds into staking pools to have a better chance of earning staking rewards. Start by researching the staking pools available for the cryptocurrency you have. There are a few things to look for here. You don't earn rewards while your staking pool's servers are down. With this in mind, pick one that has an uptime as close to 100% as possible. Reasonable fees. All staking pools take a small cut of the staking rewards as a fee. 2 to 5% is the most common scale to go by. Anything higher than this is not worth the risk. Size. Larger pools are more likely to get chosen to validate blocks, but smaller pools offer larger rewards if they are chosen. Stay away from a pool that's too small and could potentially fail. Also, some cryptos limit the number of rewards a pool can earn, so the largest pools can become oversaturated with investors. Most experienced stakers go for the mid-sized pools using not too big and not too small mentality. Once you've found a pool, stake your crypto to it through your wallet. You will immediately start earning rewards. What is BNB Shield? The BNB Shield network is a token on the BSC platform which has the lofty goal of making the crypto market safer for everyone to invest in. The token is deflationary with a 2% tax on every single transaction. 1% is burned, and the other 1% is redistributed among holders of BNB. The token never stops increasing in rarity. BNB Shield is essentially a smart contract app, and most of the time, these work relatively the same but with sometimes slightly different tokenomics, which is the way the math works out when it comes to depositing funds. What you're doing with the staking process is speculating on how quickly this contract balance will hit zero. So if you were the last investor to get in on crypto you were staking and all the other investors took their profits, you would be left holding the very expensive bag. The key to staking is to not be the last man standing or the one holding the very expensive bag. You need to get in early, and you want the chain to last as long as possible. So the sooner you get in, the less risk there is of losing any funds. When the contract balance starts, the balance goes up, and as it goes up, users are taking a whopping 10 to 20% from the contract balance. 10% daily. To start staking BNB, first you need to make sure you have BNB in your wallet, and then you can calculate your profits based on how long you speculate the contract will last. The best thing about it is every time you withdraw your profits, there's 10% that is added into what is called the insurance fund, which helps greatly if the contract balance goes to zero before you get out. You need to keep in mind when withdrawing profits that you can't take out the principal. You're only withdrawing the interest. Depending on how conservative you are with how long you think the contract will last, will ultimately decide how much profit you will make. By using this process, you can see up to 20 BNB profit every single day. Sometimes maybe a little less, but if you know your crypto, you can earn up to 10% profit every day by following the groundwork laid out here. What questions and comments do you have about BNB staking? Don't be shy to leave your thoughts in the comment section below. Like this video, subscribe, and be sure to share the knowledge. For more vital information, head to Big Brain Money. Head to Big Brain Money archives for more videos, or simply click on the following videos.